Morning students. Today we are discussing about next topic that is come under a fourth unit that is known as Indian financial system. So what is the Indian financial system? Basically, before studying a Indian financial system, we must know what is a financial system. Under a financial system, there are many financial services, financial instruments, or financial institutions which are providing a financial services, and there are regulatories such as a central bank, such as other banks, commercial banks, or there are some securities which are to be deal in to the financial systems. So basically, when we are talking about Indian financial system, there is a chart which will give you an overview of this chapter. So basically, when we are studying about Indian financial system, here Indian financial system, there is a diagram we will study in the next slide. So that is the Indian financial system. There are many components of Indian financial system. So when we are talking about there is first one is financial institutions, second one is financial markets, and third one is financial instruments, fourth is financial services. So that is, there are four broader areas we have to study under a Indian financial system. So the first one is banking institutions, financial institutions, under which that should be categorized into two parts: banking systems, banking institutions, and second one is non-banking institutions. So when we are talking about banking institutions, that can be regulated by RBI, that is Reserve Bank of India, that is a central bank. And when we are talking about a non-banking financial institutions, that can be regulated by NHB. NHB stands for National Housing Board. So here, when we are talking about banking institutions are those which got a license of a bank from RBI, and they are providing a financial services. So commercial banks here, first is commercial banks and second one is cooperative banks. So commercial banks are basically banks which are dealing in accepting deposits or withdrawals. So when we are talking about commercial banks should be categorized into four parts. One is public sector bank. Public sector bank such as SBI, PNB. So in which government has a part of a share. So the second one is private sector banks. Private sector banks such as when we are talking about private sector banks, these are having a part of a public that can issue shares to the public. So basically, private sector banks are examples are HDFC Bank, Axis Bank, any other private institution which are providing financial services under a RBI licensing. Then the next one is RRBs. RRB stands for Regional Rural Banks. Basically, these are the Grameen banks which are located in the villages. Basically, they are providing services to the villages or development of rural areas. The next one is foreign banks. Foreign banks are basically which are established under any foreign regulations such as HSBC. So Federal Bank. So these are the some commercial broader areas of commercial banks. Another one is cooperative banks. These are also known as cooperative societies, which are giving help to the, you can say, agriculturist or any of the society, any part of the society, such as for example, if I'm talking about a cooperative societies, for example, the part of a society such as farmers get you can say get a loan under cooperative banks. Basically, they are providing a loan to the farmers or agriculturists at a very low rate. And when we are talking about non-banking financial institutions, here that should be categorized into two parts. One is DFIs. DFIs basically development financial institutions, and another is non-banking. So when we are talking about DFIs, that should be basically development banks. Here, that should be categorized into all India level, which is called central or union level, and another is at state level. When we are talking about investment institutions, that should be categorized into such investments. For example, if somebody wants to invest into insurance, so they can invest into LIC or GIC. LIC stands for Life Insurance Corporation, and GIC stands for General Insurance Corporation. UTI, Union Trust of India. So basically, when we are talking about these parts, these are basically specific investment institutions. The next one is specialized institutions which are providing a credit to the society. For example, if I'm talking about here, we are talking about SFCs. SFCs stands for State Financial Corporations, or ICICI Bank, which is basically providing a credit to the institutions. And when we are talking about other part, that is non-banking financial entities, basically these are called non-banking financial corporations, which are basically do not get license from RBI, and but they are running into the financial services, such as when we are talking about these institutions, these can be categorized as some of the examples are Muthoot Finance, India Infoline Gold Loan, Muthoot FinCorp. These are basically some examples of NBFCs. Basically, they are providing equipment leasing, hire purchase, investments, and loans. These are basically, when we are talking about these type of institutes, basically these are providing loans which are known as consumer durables, such as Bajaj Finserv or Bajaj Finance, which are providing a loan for the consumer durable goods. So these are such institutions. When we are talking about another part, that is a financial market. Financial market is basically categorized into two parts. One is money market, another is capital market. When we are talking about a money market instruments are those which can be realized within a 1 year. But if we can talk about more than 1 year, that is for capital market. Here, money market is for the short period of time, and the capital market is for long period of time. So money market, under money market, there are basically some instruments which are to be covered. One is call money market, which is for very short period of time, that is from 1 to 14 days. And treasury bills are basically issued for three type of tenures. One is 90-day bills, second is 180-day bills, third is 360-day bills. So basically these are known as T-bills, which are also known as treasury bills, which are issued by the government. Commercial bills or commercial papers or certificate of deposits, again these are a very short period of time. Basically these can be issued less than 1 year by any of the bank. When we are talking about a capital market, these can be divided into three parts. One is primary market, where we can deal into the stocks. Secondary market, where we can deal into the agricultural products. And the third one is called derivative markets. Derivative markets, where we can derive the value of underlying asset from other assets. So these are the two type of markets. Money market is for shorter period of time, that is less than 1 year, and capital market is for longer period of time. So another point is financial instruments. Financial instruments, these can be categorized on the basis of term and type. Term is basically short term, medium term, and long term. Short term, when we are talking about, that is for less than 1 year. Medium term is from 1 to 3 years, and long term is for more than 3 years. And when we are talking about other part, type, that are primary securities, second is secondary securities, and third is innovative instruments. primary, when we are invest money into the agricultural products, that are primary securities. When we are investing into the shares or securities, that are called secondary securities. And the third one is innovative securities, such as in today's world we are looking after the products such as mutual funds and other type of health insurances. These are basically innovative products. So in the last part, that is financial services, these are basically divided into two parts: fund based and fee based. When we are going to the bank, they are providing services, uh, such services which are providing us a fund, that are known as fund based services, which are providing on a basis of fees, that are called fee based services. For example, if we are going to the bank for you can say applying for a housing loan, that is a fund based service. But when we are talking about a debit card, use of debit card is basically used by a customer, or we can say an investor, for depositing and withdrawing the money, and for that they have to pay some fees, so that is known as fee based service. So basically we can categorize into the following parts. So when we are talking about asset based or fund based or leasing, fund based services, these are categorized into leasing. Leasing is basically when we are providing a asset for a long period of time on a rent, that is known as leasing. Another second part is hire purchase. Hire purchase, when we are purchasing a goods on installment basis, where we have to pay some down payment in the beginning of the tenure or at the time of purchase, that is known as hire purchase system. If we cannot pay any of the installment, or we can make a default in any of the payment of an installment, then the vendor has a right to pick up the asset, or they can resell the asset in the market. So basically that is known as hire purchase. Consumer credit is basically when we are buying an asset on installment basis, where the installments are less than 1 year. For example, if we want to buy a asset, uh, which may say, you can say washing machine, air conditioner, any of the necessary which can be used in a home, that is known as consumer credit. So another one is bill discounting. When we are going to the shop and purchasing the goods on credit, and we are issuing a bill, as we have already studied in legal environment for business, where Gurinder sir teach us uh, about bill discounting, where we are issuing a check against the credit purchase, that can be called bill discounting. And here the drawee of the bill or payee of the bill can go to the bank for advance payment from the bank, that is known as bill discounting, where bank charge some discount charges. Another is venture capital. Venture capital is basically a capital which is a risky capital, where we want to start a new business, then we require some venture capital. Means, for example, if we want a finance for starting a new business, that is known as venture capital. Another one is housing finance. Housing finance, I have already told you, a housing loan. When we are going to the bank for getting a housing loan, that is come under housing finance. Next is insurance. Insurance, when where we are paying a premium to the company for protection of some asset, again that is called asset based or fund based service. The last one is factoring, where we have given a credit to some other person, and there are chances of bad debts, so we involve a bank, or we involve some other party to recover our loan amount. So that is known as factor. Basically, here factoring is used for a process of recovery of debt amount. So basically, factor is also known as a recovery agent. And next one is called fee based service. Fee based services are such as merchant banking, where we are using a debit card, credit cards, uh, credit 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 banking. Here the word is written wrong. Credit banking is basically where bank is given a credit, such as a credit card, and they are charging fees for the cards. And the next one is stockbroking, where buying and selling of securities or stocks in the market, and here they are charging some brokerage on sale and purchase of securities. And the last one is mergers, when the banks or financial institutions providing services relating to mergers and acquisitions, and they are charging some liquidation expenses, or you can say some commission, that is known as fees for mergers and acquisitions. So basically these are the components of Indian financial system that we can study in the further lecture. That is basically an overview of this unit. Here we have to study about the financial institutions in first part, second part is for financial markets, third part is for financial instruments, fourth is for financial services. So we will study later on one by one about all the four topics that should be covered in 4 lectures. So thank you so much for listening. If you have any query, then you can ask me by, you can say call me, or you can say text me personally. Thank you so much.